So again, good morning, everyone. Let's go ahead and get started here. So on the screen right now, I've got the MTM, our timing model, just looking at the overall universe of what are the exchanges indicating from a tick perspective. And why this is significant in the big picture of things is that we're still living below the ribbon, and you can see if we continue to live below the ribbon today, we're probably going to get a downward confirmation. Now this is on the longest time frame. This is a 1 to 3 week time frame, and this just confirms what we already are feeling, that the markets are in a downtrend, right? So this isn't necessarily a timing signal in the sense of, oh, I'm going to go ahead and now start getting short. That actually would have been back here, or even when you entered the top of the ribbon a couple weeks ago. But this is just a confirmation that the trend is sticking, and we're entering another regime. So that's important. So long term, we're looking fairly bearish, and we're living below this thing that we call the ribbon, and that's important, right? So you can just glance at this without really knowing anything about what the delta or the gamma position in the market is, and you can see, we're under some pressure. On a short-term time frame, we have the instantaneous cumulative tick, and that's this bolded white line. Why that's important is that we actually had a really strong run yesterday despite all of the noise that was going on. So the underlying exchanges that comprise the ARCX, and that's the New York Stock Exchange, the NASDAQ, and the AMX, we're showing some pretty significant accumulation across the board. Now, it wasn't reflected in the SPX, I understand, or the NDX per se, but stocks were being bought, and we're seeing a couple of these. And I noted part of that this morning in my notes, that we're actually starting to see a little bit of thawing in the overall picture. I posted the USC, which is the US composite, in my notes this morning, and you can see the 52-week new lows, which are red, 52-week new highs, which are green, the difference. And we're starting to see this recovery mechanism, which is an attempt by large players to present sweep orders, large amounts of, think of a big iceberg out there as a resting order, and then they break it into smaller pieces, and those are presented to the exchanges, and they're just they persist after 1 minute, and they're net buying or net selling in excess of, I've got it set to 1,000 here for the USC. Why that's important to us is this is showing demand. When it's positive and recovering for the day, it's showing demand. So that's risk on. And you can see we didn't have risk on before that, right? So we've been in this period of risk off, and now we're starting to see attempts, but it's failing, right? But we're seeing attempts at risk on. This is usually the first step in something happening over the longer term. Now, of course, when we take a look at today, and as I said in the notes, we're down to 73, right? So markets are set to open 73 points lower than they were yesterday. So what that's going to do is that's going to basically cause us to gap down, and it's going to probably cause some folks to have a reversal down, and we're probably going to see some risk off into the beginning. This is not necessarily a call for you to get on board the bus to the downside. I would wait and see. What, let the book clear for the first 10, 15 minutes, just get a sense of what's going on there. After 10 o'clock, we'll start getting some readings dialed in on Vol M and Vol D, and we can see what's happening there. We are, the 73 down. Let me grab my notes from this morning. I think I've got it right here. Yeah, so here we go. So the notes that I posted this morning, 73 down is going to put us right at the top, or right into where this lower edge of the iron condor is. And so with that in mind, you can look at the net OI here relative to what's around us. These are large numbers. But I will say almost categorically in the big picture, this is the all expiries view of the SPXP. Again, from my notes this morning, so go down and look at that. You can see that, yeah, there's some big numbers in here, but they're not what I would consider huge numbers. There's actually more here at 5,800 across all expiries than there is in any one individual. So the reason I included this and alluded to this morning is that 5,800 is going to be a fairly significant level, and we're actually set to gap down below it, right? So you're going to now convert a large number of puts across all of the expiries to an in-the-money status. Now, most of this is going to be somewhat sticky, and they're not necessarily going to monetize. That's what the 0DTE is for, right? That's what this is used for. And you can see the 5,800 actually is not a significant number today, right? So we've got this interplay between the large complex of all expiries and what's showing up versus the 0DTE. And this is why in my process that I do go over every morning, I always look at the large players, right, in the long-term time frames, and I want to see what's the overall structure, and then I want to take a look at the 0DTE structure and see how well does that overlay, how well do those numbers kind of coincide here. Not very well today, and with this gap down, with this iron condor, the put spread sitting down here with the IC, I think we're in a scenario where, you know, we could actually break through this thing, and if we do, we're likely to head lower. But I will say, heading lower here today, when we take a look at the IC and the pre-market, you can see that the calls actually dry up as we go down. So monetization of these calls is not necessarily going to drive us lower. Sure, it's got, at the spot price, it's got, you know, green deltas associated with it, so those are in the money relative to where the spot price was last night. And if we gap down here, everything down here is going to remain in the money, but there's not a lot there. So closing those in context of a drop down below what we call drunken sailor, this level that's going to be defined by the lower half of the IC, it's all going to be driven by volumetrics. What is the market doing intra-trade, right? So we've got POI, the put open interest maximum for the 0DTE, sitting right here at 57.70, and that's going to be a very large, and if we break through that 57.70, if we break through that and go through the bottom of DS, if there are a lot of opening puts, more negative deltas coming into the complex, then what we're going to see is probably a push down, not due to fear from the call holders, but almost assuredly from speculation, greed from those folks who want to take advantage of driving price lower. So we'll see. COTMP will be a number to watch. That'll update in the morning. I could have run the EM chart and gotten what that tentative value was if we break through, but you can do it yourself. If you don't know how to do that, the syntax is actually in yesterday's inlays that I had. I had the EM inlay with the syntax in there. So what does this mean in the broad picture for today? So the ICs are presumably between here. We're set to gap open actually down into this area, which is going to be right in that lower put spread area. If we lose that, we're going to have a real heavy amount of puts in the overhead. These are all going to be in the money. Why that matters is that as those go in the money, we're adding more negative delta to the book, makes the dealer's book longer, and all things considered, they're going to sell futures, correlated instruments, whatnot, and they're going to unload some risk as we go down. So I do anticipate some push to the downside. Now, when we take a look at the NetStat inlay, this is set up at the closing value, the 58.41 value. An update that is in the works right now will allow you to set the price for NetStat, and you'll be able to see what the influence is at different prices. That's something that is in stage right now and that we're working on. It's got to go through QA before we get out there. Another key thing that I want you guys to be aware of is we're hitting lows in GEX ratio. For the SPX, these are extremely low values. It doesn't mean we can't go any lower. We certainly can. Remember, GEX is a spot price dependent, but it's also time dependent, right? And the horizon, depending on the magnitude of the strikes, matters. And what I mean by that is this, for instance, right? So this is the dominance of GEX expiries. This again is the all expiries view that you see here, and you can see that 331 is at the top of the list. It already is 13% of the gamma expiry, and here we are on the 6th, right? And then today, or tomorrow, excuse me, is 11%. Today actually is down here at 6%. So this is not a very strong day in the overall context of things. Why do I bring this up? When we take a look at GEX exposure, you're actually looking out across the gamma surface, right? And you're basically saying, what is the aggregation of positioning multiple days across? This chart would actually be applicable, more on this page than it would actually be here, but I include it because of the discussion points here. And what this is basically telling us, and it's telling me, is that the market is still, over the short-term horizon, is still positioning fairly significantly to the downside, right? We're not above 1, and if you're not above 1 in terms of GEX ratio, you're not call dominated overall as a structure. And sure enough, gamma conditions put dominated. You can see that right here, and these two are directly related, right? So they're taking a look. The only difference is this one is tied to the 0DT or whatever expirations that you have selected, whereas this is looking at all of the expirations. I will tell you the gamma that's out 200 days from now is a constant value and has really no impact on this, whereas the gamma that is today, tomorrow, and into next week has a fairly significant impact. So watching GR, GEX ratio, and the $GR is a good way to do this. The other thing that I want to highlight here is that for the SPX, we actually had a major jump yesterday. And when we start seeing these come above 0, it's time to pay attention. But I'll note it's the other ones, and I posted the link, and you can go down to the pre-market charts for DBH for the delta balance. They all are pulling back in the pre-market, and the delta balance is all on the put side. So as we look out into Friday, and then we look out into Monday, Tuesday, Wednesday of next week at these price levels, and it's going to be made worse by this gap down. At the price levels, even with this move up yesterday, we're still showing a lot of negativity. Right, so we don't have a key signal into next week that's saying, hey, positioning is looking pretty bullish now. Are we taking advantage of, for instance, the attempts that we were seeing in the market trend model? Are we seeing something that's indicative of trying to go forward and people positioning for calls on the SPX to the upside? Surely they are coming to play, but they are not dominant. And I think that's the important thing to realize. Another thing that I wanted to highlight here is that yesterday this was solid red. Go back and look at my notes, and we had just red all the way up and down. Now this is spot price dependent, right? So the net delta column changes as spot price changes. Why that's important to us is we're starting to see a little bit of dry up. Now we moved down yesterday, right? Or excuse me, moved up yesterday. And so we are starting now to turn what was out of the money calls into the money, but there's still out of the money puts that are effectively vaporizing and allowing those in the money calls now to start peeking through. This too is an indication of some thawing that is occurring. It doesn't mean that there isn't ice on the lake and that it's probably still safe to go out and do some ice fishing, but we're starting to see a little bit of thawing here. So I would just be aware, watch this. The all expiries view is a great way to look at this. And what we want to see eventually is we want to see more green start coming through. The reason this is green and this is red, again, it's spot price dependent. And it's because it's a single day expiry, right? So these are, for all intents and purposes, anything with a 0 down here is already limited, right? So it's already maxed out at a delta of +1. All the zeros up here are all limited out with a delta of -1. So you multiply it by the OI, times it by 100 because we notionalize it to shares. The web app notionalizes these to shares just so you can, if you're looking at stocks, you know how many equivalent shares are there in delta. And the bottom line is basically saying that for the 0 DTE, we are seeing, effectively we're seeing a nice cleanup of some of the out of the money put speculation, which is drying up, allowing the in the money calls that exist to actually peer through. And then you can see the transition. Look where we went to. We went literally right to the middle of the transition, right below the DEX transition that we identified for today. So this is a fairly clean way to say we ended the day yesterday kind of right in the middle of a no pressure zone, but now opening today we're down here at this lower IC level, and we're just going to have to see what occurs there. So I think from a game plan perspective, watch the bottom side of DS. Right? If we break through DS, we would want to be short, but it's not going to be a huge run down unless we get a lot of volume to the downside. So in the context of vol M, we're going to want to see downward sloping and persistent downward sloping calls being closed as well as puts being opened. That'll be the Linfit lines in the vol M command. So watch for those and just see what that looks like. If we don't have that, if they cross, just be aware that and take a look at the ROC, the rate of change of those lines. If they go positive, then we're going to start seeing a push back up. And, candidly, we might be above and close. This is a very large range for that IC. We might close within this range, which would be, allowing it to go to max value. Just so folks know, we did follow the IC person into the trade. I did. Right after the close, I bought the exact same strikes or sold the exact same strikes. So I'm going to feel the pain or whatever, but I did so in a way that if it happens, I didn't put any more than 1% equity at risk, so it's not really a big deal here. Less than 1% equity at risk, because as I was saying earlier in the day yesterday, who in the hell puts on an IC in this environment when you've got major put dominance and you've got all this going on? We're well below the deltas. We're well below this area up here. I wouldn't think of doing this, but it seems like a fun exercise. And we were expecting that he was going to come in at 2x. He did not come in at 2x. He came in, by all intents, all data sources that I can parse, and from CVOE to black box stocks to others, the best I can do here is come up with about 18,000 contracts, which is about the same size that he had yesterday. So it's strong for this, but it's not very strong for this. And so I'm not surprised if we lose the pin on the lower side and break free. I'm not really thinking we're going to make a run at the high side. In fact, I may close the high side. Each of those contracts is going to be around $100, $105 max profit that I received. So I may just close those out and just be done with it. Take the profit while you can and not have to wait for the day. And then that just leaves this bottom side exposed. So we'll see. And I hope everyone has a good trading day. So let me know if you guys got any questions or comments here.